Hey everybody, Jim Malone here, coming to you live on Dallas Trading Floor on the 9th of September. Here we are, and the market has definitely taken a move to a change in direction, and this is kind of an important thing when this happens. I just wanted to be very clear. This does not necessarily mean that we're going to see the market move down or correct, but the market has moved from a confirmed uptrend to an uptrend under pressure, and this happens periodically, and it signals a change in the tenor of the market. It doesn't necessarily mean that we are going to see a sell-off, but there is a higher likelihood of it. And so it's very important when this happens, when these signals happen, that you pay heed, because they can be very, very detrimental if you just hang on and you don't have stop losses set and the market moves against you. I do believe that we are possibly in the beginning of a correction. Now, the correction, it's not a bear market, and I want to be very clear about that. It's not a bear market. It is a potential correction in the market, and I do believe that it might be as much as 10% or maybe even more. That it may pull back. It may not do anything. It may just go sideways, and that's kind of what I've been seeing with the market. But I just want to be very clear about this, and I put out a TikTok on this, that we may be seeing a change in the characteristic on the market. And part of the reason is that even though this is an up day, we've had 3 down days in a row. Even though this is an up day, markets typically do not retrace all the way. All the way down. And I want to kind of show you the spike in volatility right now with the chart that I have. This is basically the VIX, and basically what this does is, as this goes up, typically more volatility typically will make the underlying values tend to be a little bit weaker, and definitely we've seen a spike in that in the last few days. Now, we do have the last 3 days. Now, this is absolutely opposite from the way the chart moves. As this moves up, that means the market typically is moving down. So as you can see, since March 23rd, we've had a lessening essentially of volatility, and the market has been going up. But about 3 days ago, we started to see a change in the direction of the market. And what this is that this is basically an uptrend under pressure. And I want to show you that basically what's happening with the market direction. And this is very, very important. Even that we are still in an uptrend, but we're under pressure, meaning that it's very bad time to start putting on trades. So if you're looking to buy into trades, be extremely careful right now, because we may have a change in the direction. Now, it is true that the S&P 500 is up 0.238%, and also the Dow Jones is up as well, and the NASDAQ. They're all 3 up, but remember, they have been down for the last 3 days, and we may be seeing a change in the market direction. The most important thing is, if you have gains right now, consider protecting your gains. One of the best ways that you can do this is by selling, if you have winners, selling about half of your positions and getting ready to possibly go all cash. I'm currently all cash, with the one exception of I do have in the small portfolio, I do have a position in Microsoft. And of course, with the small portfolio, I'm just showing you, it's a sample portfolio as I'm trading it. So I am all in cash with the exception of Microsoft. I've sold basically all of my Tesla, and I have also sold Apple. Now, we are coming up on some very significant days here. Apple is going to be is going to be announcing a big announcement in about a week, on the 15th. So that's probably the 5G iPhone. That's going to be a very big deal. I still believe that a lot of the chip companies like Skyworks and Qualcomm, stuff like that, they will move in sympathy as well. But be very careful when there's a change in uptrend. I also want to point out the fact that Lululemon, which has been a very high flyer, has reversed and moved significantly lower today, and that may be the start of things. Also, I believe that Peloton may be under pressure as well. Again, these are stocks that a lot of people are in, a lot of big companies are in. They've run up a lot. I'm just saying, if you have gains in stocks like this, you might want to consider possibly taking off a little bit taking a little bit off the table right now, because I do believe that there may be a pullback. Pullbacks can be a very, very good time to buy stocks, but you got to be able to buy them. And so if you do have gains, consider reordering your portfolio. Also, at this point, you want to start reducing any margin accounts that you have, because in a downturn, remember, margins will double your losses. So be very careful. I do believe that we are coming to a period that can have some great, great opportunities, but we have to be extremely careful. Now, I want to show you the first slide, of course, is of the SPDR. The SPDR, of course, is the world's largest ETF, and literally there are trillions of dollars invested in this. This is that many, many people have their entire life savings in this. So it's very important, if you do have that, you always want to hedge when something like this has happened. As you'll notice, this is the daily chart here. There's been a pullback since the high that we had basically on about Tuesday of last week. We are starting to see some degradation. It moved down to the 50-day moving average, and then I believe it bounced up. Today, it is an uptrend. It's up $8.81 basically, but it's fallen below a very key level, I believe, which is about the 350 level. Now, here's the thing about the SPDR. On March 23rd, 2020, the SPDR made its low, and the low on the SPDR on that day was 211 on that. So it has moved up significantly since that time. That said, typically the way stocks typically move on indexes is if there is a low made, and that was made, of course, on the 23rd of March of 2020, typically before it can go significantly higher, it must retest that low. Now, of course, everybody has discounted. Everybody said, well, it's a V-type recovery, and we may not see the retest. Well, that is true to some extent. There's been a lot of cash pushed into the market, but the market, the economy is now going to start to reopen, and unfortunately, and I know here in Dallas this is definitely the case, because one of my favorite restaurants absolutely went out of business and it will not reopen. There's going to be a lot. I mean, as the tide goes out, you're going to see a lot of the dead bodies. So I'm not trying to be negative here. I'm just saying be very careful, because I do believe that the tenor of the market has changed, and I've moved essentially from being very aggressive, even using margin during this period in Tesla and other stocks, to basically going all cash and getting ready possibly to short some of these bigger names. And of course, I will be going over that on Dallas Trading Floor, and hopefully I can put that out there to some people that it may help as well. But again, I'm almost all in cash now. I do think there is now. This may be a false alarm. I just want to be clear. This may be a false alarm, and I may be very early in this, and maybe too early in this, but when this happened last time, and that was in February, if you look back at my videos, mostly from TikTok and also on YouTube, the very early ones, it talks about the same thing that was happening. At that time, my recommendation was NVIDIA, and the buy point on that was 257. Now it's up at about 500, so it's almost doubled in value since then. Also, at that time, when this market started to turn, you could feel it. It's a similar feeling right now. It's not really a feeling. Believe me, I don't believe in in feelings here. I'm looking significantly at the amounts of new highs that have been made. One of the lists that I look at very, very carefully to determine this is the amount of stocks that have just gone through earnings that are not up from that are down from that. And that list is almost, of the major stocks, is over 1,100 stocks that are moving down. I'm talking stocks that have been high flyers, like Lululemon. So be very careful. I do sense, at least in the charts, that there may be a reversal. So I just want you to be very, very careful about that. and protect your position, especially if you have gains, because gains. The most important thing in this game is to protect your gains, because they're hard to come by. Now, I want to show you exactly what I have, just for full disclosure, because this is the thing. I have only one position. It's in my small portfolio. Everything else has been liquidated, and that is a Microsoft position. And when this is currently trading at about 213 when the slide was taken, and the price is up about $6, about 5%, which is amazing. But remember, this is on a snapback from 3 heavy days of selling on this. Also, you'll notice that even though this price is up, it's relatively low volume. So I am seeing weakness even in the names such as Microsoft. Microsoft is probably, in terms of the tech names, probably the most safe haven of all safe havens. So I just wanted to be clear about that as we're going forward. And I just want to show you what's on my watch list and what's in the small portfolio. And I'm going to do that right now by bringing that up on the screen. There we go. And by the way, you can all see my small portfolio, how I'm trading it, what my watch list is, by basically going. It's very easy. Just go to just go to my website, which is DallasTradingFloor.com, and subscribe to the Action Trade Alerts, www.dallastradingfloor.com. And also on that page there is a link to to get a link to the small portfolio, which I'm going to show you just in a second here. Here we go. Here is the small portfolio. This is currently, now this is a portfolio that basically I started with $5,000, and I've been trading for about 2 months. As you can see, we did very well in August, but not so much in currently. And the reason is because this portfolio, essentially we've seen some retracement. The only position I have is basically cash and Microsoft. Now, one of the things I want to point out to you is that I did see in this a move. Oh, there we go. Okay. And I'm going to show you this right now. This is my watch list that I'm currently watching. I did update the Tesla buy point. The buy point in Tesla has moved up to the 50-day line, and that is 359.10. Now, currently, it is trading slightly below. Oh, it's just moved right to that line. So, technically, Tesla is in a buy zone. Okay, technically it is, because it's moved right to the 50-day moving average. Now, I'm not going to buy it at this level. I'm going to wait to see how the rest of the market trades. If we see some movement on that, if we see some strengthening, I may put my toe into the water on Tesla again. Again, I'm all out and I'm waiting for it to come in. But the buy point at the 50-day line is 359.10, and of course the lookup price right now at currently is 362.77. Now, this is not as good a buy point as the original buy point that I was talking about way back in the basically in the March timeframe, the late March timeframe of $1,000, which I put out there. That was the unsplit amount. So if this was pre-split, we could multiply this times 5 to get the real number. So this makes sense at 359, because if you multiply that times 5, which would have been the pre-split price, we would be at basically we would be at below $2,000 a share, which is what I sold out right before the split. I sold out at basically about $2,000 a share. It did go higher, but I do believe that there was strength at that level. So that's kind of the long and the short of it. A lot of job owning here, and hopefully I'm going to start taking some questions and see if I can help maybe answer some questions here. All right. So what do you think of the software ADI? Let me just see if I can. Let me see if I can take that question just in a little bit. Let me see if I can get this. Tesla today entered again at 350. That's not a bad place to enter Tesla, by the way, but you want to be very careful re-entering Tesla. I don't think that's a bad level to be in Tesla at, even though we are in a market that may be correcting, because the buy point on Tesla that I've calculated is, again, very, very close to that. So I think that is possibly a very good place to be. So let's look at the Tesla chart. I'm going to look at I have some quite good software here that hopefully I'm going to open up to kind of let's look at the Tesla chart together to see how it's trading, both on the daily chart and on the weekly chart. So I'm going to move it to the weekly chart, and let's take a look at that really quickly here for Tesla, because Tesla I think is a very key is a very key stock in terms of how everything else is going to trade. So here we go with the Tesla chart. So basically, what's happened is that on Tuesday, Tesla tested the 21-day line. That's this green line here. I don't know if you can see it. By the way, everybody, I am broadcasting for those of you who are watching on TikTok. I'm simulcasting this on YouTube at youtube.com/Dallas Trading Floor, and you can see them in sort of the charts that I look at here. Just to go back to that, it moved below the 21-day moving average, and then it moved below right to the 50-day. It looks as if it is bounced off the 50-day. It's currently in a buy zone at 360.71, which is this is a live chart. It is still it's good volume, but in order for see conviction, a real buy point, I want to see the volume higher than this. I want to see it up to the 50-day moving average. That the volume, by the way, is the lower chart here. The blue bar is what I'm looking for, which is good. That means there's buying pressure. I do believe that we may be seeing a very early time to put your toe back in the water on Tesla, but be very careful because of the change in the market. Now, the market direction it has not changed yet, but there is a danger of a pullback based on the charts that I'm seeing. So be very careful entering this. Don't enter this with more than a half position. Now, what do I mean by half position? Well, if you take the value of your portfolio, you divide it by 8, that will give you a full position. So if you divide it by 16, that's going to give you a half position. No, try to buy no more than that going in, and then only buy as it's moving up so that you get the maximum potential profit with the least risk. That's very, very important when you're buying into this kind of a weak market like this. It's not as strong. The uptrend is not as strong as it was even a week ago. So we've got to be careful entering right now. So just FYI. Okay, so let's see. Let's look at TSM, Taiwan Semiconductor Manufacturing. This is a question from Canada, which I always love talking to people in Canada. And by the way, you can. There's a if you're in Canada, you do have to. Unfortunately, you do have to do a conversion on the on the dollar to the Canadian dollar. It's about 0.77 greenbacks to the loonie. So that would be kind of the area that's in. Let's look at this one. This is Taiwan Semiconductor. This was on my my watch list, and I did actually buy this one, but unfortunately, it had a bit of weakness, and I moved out of it. It's moved below the 21-day average. It's still above the 50-day, which is good, but this chart pattern is in consolidation. This is not a buy right now. This stock would be much better on a watch list. I still think it can move higher. We're in a semiconductor super cycle right now. That meaning that the new Moore's law basically says that every 18 months there's a new size of transistor in the dies for semiconductors, and that creates a whole new cycle of buying for companies like Lam Research, and those kind of companies. Now, Taiwan Semiconductor, the reason I'm going into all this detail is Taiwan Semiconductor is one of the largest fabs in the world. They make product for almost the entire industry, such as such as NVIDIA, such as Cirrus Logic, and the so-called fabless semiconductor company. So Taiwan Semiconductor is basically very, very important. They all manufacture both in Taiwan, and they do have fabs here in the United States. There's one in Austin, Texas, for instance. So very important company here. I wouldn't be a buyer at this level. I do think that we're getting relatively close to earnings. We're about 13 days away of earnings. Another thing, when you're buying companies like this, especially in the market that's changing direction like this, you want to be careful buying them into earnings. I know that I'm throwing up all these caution flags, but I just see very, very careful entering in a market like this that may be changing direction, because you don't want to be caught on the downside of a reversal. So that's my main concern for everyone out there, and I'm definitely trimming my stock as well. So let's take another question. Thank you for hanging on there. What about ADI? Let's look at ADI, see if I can come up with an idea on ADI really quickly. Analog Devices, wow, another great company, but unfortunately, this shows weakness, and I don't want to buy. Remember, we don't want to buy stocks on weaknesses. We want to buy a stock when it forms a new high. It sounds weird, but the best time typically to buy a stock is on higher highs. It's counterintuitive, but we want to with stocks. It's not like buying bargain stuff at the store. You want your best price. With stocks, we want to look at prices that are relatively high and possibly going higher. So that's just FYI. Okay, on this one, again, this is going to be a tough one to buy. The buy point on this one is basically 127.39. We're significantly below that at 115. So this, I hope this is going to bounce off the 200-day moving average, and it looks like it might have, but it's still below the 50-day, and it's also below the 21-day. This is not a buy at this level, unfortunately. But again, you might want to watch this, because I think this is a very strong group, and I do think that with the 5G coming in, Analog Devices is one of the 5G stocks that I'm probably going to be profiling as potential buys, because this 5G revolution is very real. And it's going to produce a lot of winners, and the winners are going to be in the chip spaces, such as Skyworks, Analog Devices. But it's not time to buy this right now based on this chart. I want to see some more institutional money move into this before I am going to commit my funds. Now, here's the thing about Analog Devices: 52% of it is owned by the fund, so it's got extremely strong fund ownership. As Analog Devices go, so goes the market. So we want to see it having a little bit more strength before we possibly go back in there. But there's some really, really good ones there that I want you to think about watch listing, and those are, of course, Analog Devices, ADI. Another one I want you to look at is Qorvo, QRVO, as well as Skyworks as well. Those are three that I think that might do very, very well in this next movement towards 5G. Thoughts of Spartan Energy? Interesting. That's got an interesting symbol, SPAC. I'm not really SPAQ. So let's look at Spartan Energy. Wow. This, okay, I want to show you this one. I don't think you want to necessarily be in this one. We are above the 200-day moving average, which is nice. We do have a 50-day that's moving up, and we do have some nice volume, but it's just too early to tell on this one. There was a blow-off top basically back in the July time frame, and then it pulled back. I just don't exactly know what they're doing. Oh, okay. So this is okay. So this is a SPAC that is interested in buying energy companies. Wow. I mean, great idea, but the problem with these SPACs, and what a SPAC stands for is Special Purpose Acquisition corporation, and basically what it is these are blind pools that basically are put together, and then they're listed on the exchanges. They have a listing, and then they go and they do a reverse merger with an existing company to possibly take it public. And this is a lot quicker than the normal IPO route. So, but the problem with SPACs and the problem with this in general, this kind of investing, is I don't really know enough on what they're investing in to really to really look at them. I think it's far easier to find something that is already a good buy and then buy that, rather than trying to chase SPACs that may or may not be in the right thing. Sometimes they're great and sometimes they're not. So that's just the way it goes. Apple and Tesla. Let's look at Apple, because Apple's really a little bit different story than Tesla, because Apple is a proven market leader. But as you can see, it fell through the 21-day, and I want to show you that really quickly. I don't know if you could see this on the chart, but there's a green line here, and as you can see, the bars have fallen below there. Now, it's pulled back. 3 days ago, it pulled back up to get that line again, but then it moved down again, and it's pulled back up again. I just see this as basically flagging to the downside, and so we want to be careful on this one. I don't really, I really want to wait on this one, because I do think that we might have a situation where it may go lower. I think it's going to bounce off the 21-day moving average, which is, let me give you the exact number on that, and that's about 108. So let's see if it bounces off this 21-day moving average. Now, it's up today. It's at 118, which is good, but I just want to see if this thing pulls back again, and it looks like it is pulling back as we speak. It's down. It looks like it's going to pull back to the 21-day. Let's see if it settles at the 21-day, at the 50-day, the 50-day moving average. Let's see if it settles there. If it settles there and then starts to reverse back up, then it's possibly a buy. But right now, I think that you might want to be very careful. If you have any margin, you might want to consider possibly selling a little bit of that. I'm not saying that it's totally gonna move down. Apple is a quality stock like Microsoft, and I don't expect it to just crash right through the 40-day moving average. But I do think we possibly are gonna have some of a little, not really a blow off top, but a little bit of a top on this, and I think it could move lower. I believe that Apple in the near term could move below about 106. And if it does, I think that we want to be careful with that, and we possibly want to lighten the position. Now, here's the thing with Apple. Apple has a lot of very, very, very strong hands that own it. Berkshire Hathaway being the strongest of the strong, and they are the biggest shareholder in Apple right now. And they basically accumulated their position in 2 years, and they have done tremendously. They've essentially doubled their money. It's basically papered over the losses on a lot of their other companies like Delta Airlines. They've done spectacularly well in Apple, and of course, I'm still very much of an Apple bull myself, but I do think at this level with the market, I'm a little bit cautious right now. With Apple, I'm cautious pretty much with everything, so I'm not trying to single out Apple, because I do think it's super duper company, and a great company. Hey, howdy to you, by the way. All right, Microsoft. This is the only holding that I have currently, is Microsoft. This is the bellwether tech stock, more so than even even Apple is Microsoft. So here's the chart on as you can see, we've fallen below this 50-day moving average. This is a sign, and let's look at the 10-minute chart to see how it's trading into the close. Yeah, there's a little bit of weakness towards the close. I don't know if we're going to move down to where we started today, because we started today basically at about 202. I don't think we're going to move that low. But I do see some weakness potentially in this chart. So let's look at the monthly chart to kind of see where we're at. Yeah, we've got the beginnings on the monthly chart. This is a very long-term chart of a red bar. This is basically starting to say that it may be turning over and possibly losing some power here. This is one of the stocks that you want to look at to see if there's a reversal. If there's a reversal on Microsoft on the monthly chart, then I think we have to be looking at possibly pulling in our horns a little bit and seeing if if there's anything anywhere to go on that. So, oh, you know what? And I thought I was broadcasting on. I thought I was broadcasting on TikTok, and I didn't push the button, so I apologize. I've actually been online here for about 30 minutes. So unfortunately, but because of technical difficulties on TikTok, you're only going to see the last 30 minutes of the show. But if you want to see the show and you're on TikTok, I am showing charts here. So if you go over to YouTube/Dallas Trading Floor, you will see the charts that I'm showing. And the last one we showed, of course, was Microsoft. So let's see if we can do. Okay, which one is better, the QQQ or the Spider? Well, they're both interesting. The QQQ represents the NASDAQ 100. These are the 100 largest stocks that are traded on the NASDAQ. And basically, stocks like Microsoft, Apple, they're all in there. But Microsoft and Apple are also part of the Dow. Now, where the QQQ differs from the S&P 500 is, for instance, Tesla is not part of the S&P 500, so it's not part of the Spider. But it is part of the NASDAQ 100 because it's one of the largest stocks on the NASDAQ. So it's part of that. Now, that said, I mean, I've gone through a lot there. Typically, the QQQ has been leading this movement higher, and I want to show you that on the monthly chart. But I don't believe that long term I mean, I think we're going to move. I think we're going to see leadership move to the Spider at least for the next few sessions, because of the fact that the QQQ has moved up so quickly. As you can see, the QQQ. This is the monthly chart, by the way. This is really since the beginning in 1999. This is 20 years. As you can see, it's been an extremely good investment. By the way, folks, if you don't want to do stock picking, and you just want to invest and you just kind of want to set and forget, here's the way to do it. Buy something like the QQQ, and then make sure that the market is a confirmed uptrend. And then, but if there's a change like there was today, you want to basically sell half of the position. If it goes into a downturn, you want to go to cash, and then when it comes back into a confirmed uptrend, you want to buy the QQQ again. If you do this on a long-term basis, you will exceed the performance of the S&P 500. And by the way, in hedge funds, if you some of the best hedge fund managers can't even do better than the S&P 500 in bad years. So this is a way that you can be better than the average hedge fund manager, and it's very easy to do. And I'll probably try to put some educational videos on that, because I think it's really important to know that you don't have to have all this fancy stuff to do as well in the market as a hedge fund manager, and you can do it just with the Spider. Now, the S&P 500 is a much broader based, and it's the 500 largest stocks on the on the exchanges, both over the NASDAQ as well as the New York Stock Exchange. This is a much broader index. Now, here's the thing about the Spider. Many people, this is what they have their entire retirement in. So it's a very important. There's literally trillions of dollars in this ETF. One thing I will say about this: 1/3 of this, or a little bit more than 1/3 of the S&P 500 are small banks, regional banks. So there is a bit of a lag. This lags the technology indexes like the Qs because of that. But as you can see, it's not performed quite as well as the QQQ. If I were to choose between them now, I would still pick the QQQ. I would still pick the QQQ because I do think that's where the growth stocks of tomorrow are going to be. Now, that said, today is probably not the optimal day to buy, just because we're in a situation where we do have an uptrend under pressure, and that's not that's not an ideal day to come in to the market. It just isn't. It's the day to basically be building your watch list and then going from there. So we want to be real careful on a day like today where we do have potentially, and I say potentially, a change in the direction of the market. Let's talk Tesla and Apple keeping the uptrend under pressure in focus. Great. Yeah, and there's some opportunities here to get into. If you're not into Tesla, and you want to possibly put on a trade on Tesla, you have to be a little careful. It's changed a little bit of the characteristics have changed a little bit since when the split was made. As I was showing you, I don't know if you've been watching me. Hopefully, well, I hope you did. But I would like to kind of share with you sort of how these splits trade. And remember, basically on the 31st of the 31st of August was the first day that Tesla started trading as a split share. Prior to that, it had run up and it was trading. It was trading at about. I think it topped out at about 2,200. But basically, when a split is announced, stocks typically tend to follow a very, very specific pattern that is very easy to, is very easy to find if you know what you're looking for. And I want to show you that just to bring that up. And this was quite a while. This was a few months ago that I actually did that. Well, not that long ago. It was about 2 weeks ago that I actually did this slide set. And I'm going to bring up sort of how trades typically will trade. So let's see if I can get that up here. Well, maybe not. Okay, let's see if I can do that. Let's see if 111 has it in there. Let's see. Okay, I'm looking to back. A little bit of history here. Okay. No, it's not in there. Okay, I apologize. I don't have that one right available on my system, so I can't show you that right away. But what I do think is going to happen, I'll show you this on the watch list that I have on the small portfolio. And by the way, if you want to see this small portfolio, it's super easy. All you have to do is go to www.DallasTradingFloor and then just put in first and last name and an email address, and we'll get it right after you. And of course, it's all free. I just wanted to reiterate that. So this is how I am trading, my portfolio. So here we go. This is the watch list that I have currently on. I did put on 3 stocks yesterday. One is Barrick Gold. Whenever there's a little bit of volatility in the market, people tend to run into the gold shares, and their numbers have been very, very good right now. It is up, not significantly, only about $1.50, but and it is still in the buy range. It is extended. I'm not necessarily saying buy gold, but I watch the gold stocks very carefully, because when they do start moving up, that means I am anticipating a change in the market direction, because typically people run to gold when it is there's a little bit of volatility. So that's a key thing. Right now I have a buy point on the Tesla at the 50-day market. This is not a great buy point, by the way. This is not off of a base pattern like a cup with a handle or any of the really good base patterns. This is basically a pullback to the 50-day line, and that is at 359.10 is that number. So we are currently, believe it or not, we are in a buy zone for Tesla. Now, things can change very quickly on that, but this is, I've been talking about this for about 2 weeks now, that I was going to basically sell out my position prior to on the run up on Tesla. I was going to sell it out, and then that's what I did. I sold out at about $2,000. Actually, it was $19.96, I believe, was the sale price that I had on most of my shares. Then I sold out all my positions, carry it through the split, and then on the other side I was waiting for it to stabilize and start to move higher with a buy point. I believe this is it. The is going to be 359.10. I know that yesterday I was talking about an alternative buy point at 273, but I do believe that this one is a better buy point than my 273. I was a little bit too conservative on the buy point yesterday. I do think even in a choppy market, people are going to start coming into Tesla, but I'm not going to buy it until I see some confirmation in terms of volume. I'm really not going to do it to that. So okay, so I have yammered on here, and okay. When do you buy Tesla? Well, right now Tesla is in a buy zone. It is basically, the buy point is 359.10, and the buy zone is from that 359.10 up 5%. So this is what they call the buy zone. It is not a great buy zone, by the way, everybody. It's an okay buy zone, but it is not a great one. A great one would be if it was coming off of a pattern such as a cup with handle or a cup, or the very stronger patterns. This is essentially a secondary buy point, and it is buyable at 359.10 up about 5%. So you take 359.10, multiply it by 1.05, and that's going to give you the buy range. Now, if you do buy at this level, I would set a stop loss, and I would set it tighter than normal. I would set a stop loss at 6% down, not 7, not 8% down, because I do believe that we might see some volatility, and we might see a pullback here because the market direction has changed. Now, many times what happens is that when the uptrend is under pressure like this is, it will move back to a confirmed uptrend. But that is not the case today. Today it is under pressure, so be careful buying, putting on any positions like now. I am personally not going into the position. I'm waiting for some more confirmation before I'm going in. I may be sacrificing a little bit of buying it at a lower bit level, but I'm going to be more careful on that as we go in because just that. Okay, so what do you think of a SPAC? Well, it's okay, but the problem with SPACs, and the reason I'm a little bit careful when I talk about SPACs is because I first have to know what they're investing in. They're essentially blind pools, and I want to see kind of what industry they're investing in, what they're doing, and I want to see the numbers, of course. That's important, but the fact is, a SPAC is just a pool of capital that's trading on the exchange with no underlying assets. I want to see what they're going to buy. Now, there's been some very successful SPACs. One of the ones most recently was for Nikola. It was a very, very successful SPAC, and now it looks like GM may be buying into that. Those are definitely out there, but there's other ones that you just don't know what they're investing in. So instead of taking that risk, I want to look to see something that is a little bit more solid on that. Your thoughts about Microsoft on any pullbacks? I do think that Microsoft has already pulled a little bit below the 50-day moving average. Typically, if it reverses above that on strong volume, then you can jump back into it. If you're in it already and you've not exceeded your stop loss, stay in it. Don't jump out of it. But remember, whenever you buy something when a market condition changes like this, you want to protect yourself. And one of the ways you do that, of course, is by setting that stop loss. In a typical market like this, you want to set the stop loss at about 7%. So what you do is whatever you paid for it, multiply it times 0.93, and that's going to give you a number, and that's a good place to put that stop loss so that if there is a pullback, you're protected, your capital is protected. And the reason why 7%, why 8%, well, it happens to be that they have studied this there was in the 20s, there was a very famous trader that studied this named Jesse Livermore, and if you look him up online, I think you'll find a fascinating story. But he calculated this is the optimal place of loss to take was a 7 or 8% loss, because you can recover from that. Whereas if you go much more than that, it's very difficult to recover from that loss. So remember, the most important thing is always to protect your capital when you're trading, because you can always pull out of the market. The best hedge is not a hedge puts and all that time. The best hedge is cash. Always remember that. The best hedge is cash. All right, so is it worth holding Apple at 118? Well, it depends on where you got in. I think it is. My position is I came in too high as well. My position on Apple is at 120 post split on the small portfolio. I do think it is. It has moved up. It almost my position almost sold out. I had a stop loss basically at 8% down. It did not violate that, so it looks as if there's enough strength. If you're in it, I would be in it. But if you're looking to get in it, I see wait maybe a little bit. Let's see the direction of the market. Let's see how it's going to trade. Let's going to see if it's trades sideways, up or down. Now we can make money in any of those markets. If the market is going up, we can make money. Obviously, that's the easiest way. If it's going sideways, I'll show you exactly how I make money in a sideways trending market, and then in a downward trending market. This is my favorite market. I can show you how to make even more money in a downward trending market. I'm preparing for a downward trending market only because I do believe there's going to be a pullback because we've moved up very quickly and we're starting to reopen the economy. And once we do that, I think that there may be some companies, frankly, that don't fare well. And I hate to say that, but that happens in every little correction like this. So I do think we may get a correction. What is concerning the volume for all these big names? Very low bullish sentiment volume. Yeah, exactly. See, this is why I'm very, very cautious right now. This is a very, very good question, everybody out there, and I thank you for bringing this up. When there is a movement up like this after 3 days down, but it is on light volume, that is not conviction. That is not conviction. It probably is going to move lower. It's probably going to move lower because that no stocks go straight up. They don't go straight down. They have these little resting places, and one of the places they rest are at these pullback lines. These lines, the 50-day moving average, the 21-day moving average, and the 200-day moving average. Those are the really important ones. And sometimes when it pulls back, people will automatically kick in. They'll start buying, but they will buy, and it won't be very, very robust buying. And then, once that's done, once people are sold out of their positions, boom, everybody says, okay, I'm going to dump my big position now, and that forces it down. So this is a normal market. This is part of the normal market cycle. So don't go freak out and say, oh my goodness, this is the end of the world. It's not. This is just part of the normal market cycle, but there is a change in the direction. What's your thought on Apple options at a 110 put expiring? Good question. I wouldn't be in them. I wouldn't be in them at that. I think you're taking far too much risk because you're having to buy that at 110 when the stock could easily be 100 by that time. So I wouldn't be in that unless you want to buy the stock. Now I would recommend selling a lower put level further out because you don't have a lot of time on that. That's an October put. There's not a lot of theta there for you. What I'm talking about here with theta is that is what they call the time decay in an option, and that's a very important thing. In order to get more safety, and in a changing market, you want to kind of go for more safety. I think you want to be out further. I think you want to be, if you're going to do that kind of thing, if you're going to do a put in that time frame, you might want to look at some of the later options, such as maybe the December or possibly the October options rather than the November options rather than the October options. I think that you can get almost as good a price, but I think with a little bit more safety. But I would be a little bit scared at that level at 110. I do believe that Apple can fall, even though they have strong numbers because they are just such a big company, and but I do think they can fall. So whatever. What's wrong? Well, okay. I guess. All right. Well, whatever. We'll see what happens. I'm wrong all the time. I'm wrong. I'm wrong all the time. Select the elephant. Well, look. There is a market correction coming, I believe, and it's a case for your list. Actually, on my TikToks, I'm trying to date them because a lot of the ones that you're picking up may have been from the last few days. So be very careful on that. When I issue an alert of change in the market direction, I always put the date and typically the time on there because that is something that has come up. So I do appreciate you looking at me on TikTok. I really do. but I'm trying to say that I do believe that there is a bit of change in direction. Now that it may all go away in 2 days. I mean, absolutely maybe, but I am sensing a little bit of a change in the force, as they say, right? Okay, Workhorse. This is an interesting company as well. Let's take a look at the chart for Workhorse, because a lot of people. What's your thoughts on Apple? Okay, I do think that Apple is holding its own, but I'm not a buyer really of Apple right at this point. Let's look at Workhorse. Workhorse is an interesting one. I've seen a lot of movement on this one, and a lot of people have done quite well on this one. But let's look at the weekly chart on this. It's at its new high, and I do like this for a stock when it's making a new high. That's really the time to buy it. It does look like this could be a buy. I mean, it's right in the buy zone right now. So it's in a consolidation. There's a 2290 buy point on this one, so I'm going to put out there, WKHS buy point equal to $20, and what do we have there? It's right in the buy zone as we speak. So this probably should be on my list. 2290 is the buy buy point on this one. So let me put that out to everybody. There we go. All right. And by the way, for everybody looking on TikTok, thank you so much for looking on TikTok. If you want to see these graphs and the buy points, I'm trying to put them out on the chat, but unfortunately, I don't have chat capability on TikTok. I only have it on YouTube and Periscope, Facebook, and Twitch. Those are the only ones I have it on. I'm on all those platforms simultaneously. So if you want to see this, just go over to YouTube at youtube.com/DallasTradingFloor, and if you could push the subscribe button, that would super help me. That would help me a lot, and that would help a lot for me as well. So here we go. Here is. And again, here it is. The YouTube address is www.youtube.com/DallasTradingFloor, and that is the YouTube address. And if you want to do chat or anything like that, that capability is all on the YouTube channel. So, and it'll be posted after the show is done as well. So there we go. I went and took my profits of the bounce back and went all in short. Thanks for that. Okay, hey man. You know what? This is not a bad way to play it. I'm telling you. I like your strategy, Tim D. I like it because you made a nice money, and then I do think we're going to go short. And I'm getting ready to short. I'm currently not short anything. I'm getting ready to short, and I'm going to try to share it with everyone what I'm doing to short. But that is I don't. Now be very careful on the shorts because you get these snapbacks. Try to do a buy to close on your shorts at 5% or less above where you shorted, where you sold. So it's a buy to close on your limit order. I mean on your stop on your stop limit order. Buy to close. Make sure it says buy to close, and then put that 5% above where you sold that stock. But I think that's a very good way to go, Tim D. Super. Thank you for sharing that. So appreciate it. Okay, Umar, I would not buy right now. The bullish volume on Apple is very low in my opinion. I think that this is right on. This is right on. There is some bullish volume, and I can't lie but it's just not enough. And I don't think it's super bullish. I do think this is a reaction. I think people are supposedly trying to go in and pick up a bargain. They may be very sorry, and I think this is a very good. I totally agree with what you're saying. Umar, I totally agree with it. I think you're on the money there as well. So, very, very good. All right. So, let's see. Yep. Okay. So let's see if I can see. Oh, can you predict this? I can't predict anything. I just want to be clear about everyone here. This is, essentially, I do use professional software, but in no way am I prognosticator. I don't have the capability to predict, but I do have very good charts, and I have a little bit of knowledge of how these things trade. So this is really for, as they say, educational purposes only. So I wanted to get that out there. I always wanted to say that, but it is, it is it's all free here, so that's probably what it's worth. But no, you can trade very well doing that. On this overstock.com, I like the company, but here's the thing I don't like about it. It fell through the 50-day, and then it looks like it's recovering. If this thing moves above the 50-day, then we might have a reversal. But I still don't like the fact that we have relatively low volume. Well, it's not that low, but I want to see above more than average volume going above. Now that it's pierced the 50-day, I want to see it moving back above that. So this is a watch list stock. This is a very good stock, but I do think we're going to have a pullback on it. And you can, and if there's a pullback and a reversal, that's one of the best times to buy it. But when there's a pullback and there's not a reversal, it could just go down, down, down. So be careful entering this. It's not ready to be re-entered yet, but it's a good company, and I do like the area that it's in. So there you go. All right, SDGR. Let's look at SDGR real quick to see if I can give you a look at that one. Okay, Schrodinger. No, unfortunately, this is not a chart that you want to buy. This is not a chart, not even a watch list. We have a situation where on the weekly chart it is moving down and it's below. It's not traded. It's all selling here. The relative strength is still really good at 89, but no, this is not a chart that you want to buy. No, I'm afraid you don't want to buy this one. I think you want to take this off your watch list. It's moving in the wrong direction. By the way, the first thing you do anytime you evaluate a stock to buy is take a look at the chart. If it's going from the lower, I know this sounds very obvious, but believe me, people don't do this. If it's going from the lower left-hand corner to the upper right-hand corner, ascending, then it's a potential. You can look at it. If it's going the other way, just get rid of it out of hand. Don't even don't even try to buy it, because there's other ones out there that are better. So always try to find the better one with the better chart pattern. Do you have been on Etsy? They've been upgraded a few times. It's dropping, but yet it's dropping. A good entry at 113. Interesting question. I like Etsy a lot. Let's look at the chart on it. ETSY is the chart. It's a symbol for Etsy. Yeah, it's bouncing. It looks like it's bounced off the 40-day moving average. It looks like it's moving up. Let's look at the 10-minute chart on it. I think it's already closed. It closed with nice volume at the very end of the day. That's a good sign. This is a tough market, because I do think that I think buying it below. Let's look at the daily. Buying it below the 40-day is not optimal. I want to see it move above the 40-day before I'd buy it, but it is moving back up. It pierced the 50-day, and then it has been moving back up since. So this is a watch list stock, but I wouldn't buy it at this level. I would try to buy it if it exceeded 117.50 on the rebound. So that's where I would be trying to buy it. If that would be where I would be trying to buy it on the that's where I'd be trying to buy it on at the 50 days. So that's kind of that's kind of my thought on that. Okay, so June. Let's see. Your thoughts on Vert and Apple. Apps. Okay, thank you. Yeah, thank you. Let's look at Vert. Let's see if we get an entry point there for you. Okay. Oh yeah, very nice. It's right in the buy zone. Yeah, Virtu Financial, buy yourself security. Okay, very, very good. Okay, this is a broker. I like this one, June. You come up with some very good stuff. I have to say, I mean, this is a beautiful pattern. This has got a proper buy point and everything. So yeah, I like this one. It's pulled back into the range. This is a buy zone. And it's got nice volume. Yeah, this is in a buy zone. Absolutely in a buy zone right now. And it's only 3% from the pivot. This is a good one. The pivot on Virtu Financial, I really like this one. 2682. That is a good number. At 2774. this is not this is potentially a very good entry point for this. So uh, check mark on VIRT. This is not one that was on my radar, but I think this one is very, very worthwhile. It's in a buy zone. Now, if the market, of course, does move down, it's probably not ideal to get it. But this is a very good this is a very good one with a very good buy point. And thank you for sharing that. I wasn't on my watch list, but I can't watch everything because there's just, as I say, there's just so many stocks. And I've not been as big in the financials, but I do think there may be some value there. Okay, digital turbines. This is the other one that you had. Another very interesting area of investment. It's pulled right back up to the 21-day. I really like that. This is not nearly as viable as VIRT, just because this one doesn't quite have as good a chart pattern. It just doesn't have it. But that said, excuse me, it's still very, very, very strong. It's got a 99 relative strength. That's excellent. It's got good fund sponsorship at 37%. It's looking pretty decent, and it's not bad. I would watch this one. I would watch this one. I like this area. Mobile software that does content distribution. I really like this area. It's very good stock. But I think of the two, in terms of this market right now, I think that VIR2 is right in a buy zone, and that's the one you want to probably consider more than digital turbines. But they're both quite good. Microsoft. All right, Microsoft has been pulling back a little bit. This is the only stock that I am currently in. Is Microsoft. Everything else I have is cash. I'm kind of ready either to short or to buy Tesla as it moves higher. Let's take a look and see here. Okay, it is fallen below the 21-day, but it looks like it's bounced off the 40-day, so that's quite good. There's nice volume today. I think this one is going to be, this one, if you have to buy a stock, and I don't recommend in this market, I think let's see how this trades. Let's see if the market, if the market, the market is trying to make a decision now. If it goes higher in the next few days, if it returns to the confirmed uptrend, then I think that's a really good place to be. If instead it moves lower and it moves to a correction, this could be a problem. So if I was going to go in this run right now, I'd only go in with half position, even though I love the stock. And again, it's one that I was very, very stable. But I think that this is not a bad place to buy it. But I still think this is not a bad place to buy it, but I wouldn't be in with a full position. I only half position right now, just because I do think that's the case. So that's just my opinion on it. Do you think, will tomorrow be a bullish day? That's very hard to say. It's kind of like flipping a coin, but I do think that that we may see some weakness tomorrow, to be honest with you. But I've been wrong on these so many times. I do think I think we're going to see a little bit of selling pressure tomorrow, based on the charts that I'm looking at. So thank you very, very much for that question. I've gone on about an hour, and I've come to the end of the time today, but I'm going to be on tomorrow. And if you want to get on, if you want to ask a question or anything like that offline, it's easy. Here's my phone number, 214-233-5087. I show that every now and again. But the best way to get in touch with me is to go directly to www.Dallas Trading Floor and just hit the ask a question, and that helps me keep the questions ordered. So that's really the preferred way, and hopefully I try to answer them. I've been a little bit behind on those. I apologize. I'm trying to get some technical things with the website going. By the way, if you want to learn kind of the method that I use, it's called the canceling method, and it was invented by William O'Neill, who is, I consider, one of the greatest traders of all time. He's still alive, by the way. And there is a book there are books that will introduce you to this way of trading, and it's available on my website. Of course, you don't have to buy it from my website. It just has a link there to it at www.Dallas Trading Floor. So I look forward to seeing you tomorrow. And I got one more question here. Hopefully, I can get that right before we go, so I won't leave out anybody here. Oh, thank you very, very much. I appreciate that very, very much for doing that. And I'll try to get to everything again. But if you could go to Dallas Trading Floor and ask a question, that's a great way to get in touch with me offline. Sometimes I use this on the videos as well. So thank you so much, and I will see you tomorrow, 2:30 Central. I hope to see you back in happy trading, and be careful. The market condition has changed a tad, and I think that we might see a downturn, but I'm not sure. So just be more cautious than you normally would. Thank you.